Podcast is now starting. All attendees are in listen-only mode.
Hi everyone, Ron here at AbleTrend. We're going to go over the E-mini Russell here today. Although the software works the same for everything, it's just really been really working well. The E-mini Russell, it's been really terrific, and everybody's been really saying good things about it. So let's take a look at this today. It doesn't really matter what we look at because everything's always the same. The software is the same. Everything is the same as far as the signals. You just need to know where to buy, sell, and put your stop loss. Regardless of what chart we're looking at, it's exactly the same colors and dots and rules. So that's the good part about it. So let's jump in and take a look. And oh, good. I'm glad Barry says it sounds good. Yeah, I got a new microphone. Got a good one, a really good one actually. So I'm glad it's actually working for what I paid. Thanks guys. Okay, so let's jump in and take a look. So we've got a Russell chart up here, and I use a 55 and a 125 tick. And the reason I'm using that is because it's a faster, not faster, well, you have to have a faster chart as the tick chart, but the point is it needs to be able to calculate enough contracts. Tick charts go by contracts, and you have to you have to have enough contracts being traded, and the Russell does not trade as many as the NASDAQ or the ES. So that's why I had to make it a lower chart, whereby I use a 233-500 tick for the mini NASDAQ and the mini S&P. So that's the reason for that. Anyhow, let's take a look at this because, again, same colors and dots, same rules. Really doesn't matter what chart we look at. And AbleTrend works just the same whether you trade stocks. You could do long term. Some people have no interest in intraday, and that's perfectly fine. So we're going to open up here at I'm on Eastern, so we're going to open up here at 9:30, right in this area, right in here. And any one of these really is a really nice sweet spot. I mean, it's a really nice sweet spot right in there. And I just like when you're close to those dots. I mean, that's the key. You see, the further you get underneath or below the dots, like here, the greater the chance that it's going to snap back, a few minutes later. The same way, the further above the blue dots you are, the greater the chance of a pullback. So my point being is, you're still going to take the trades regardless of how far away you are. I mean, you can't get too crazy over every little, nitpick over every detail. I mean, if it's a trade, it's a trade. We're in, done. However, I'm just saying the better trades or the better chance of a good trade, because some people say, well, what's a strong buy, or what's a weak buy or a weak sell, or well, that's what that would be. So all we need is triple confirmation, and there's the first time we get red bar, red dot, red X, a couple of minutes right after the open, and as long as you're under these red dots, you're safe. That's your safe zone. Notice how many times the prices hit the red dot, bounce off it, and goes lower. It just does it. It'll do it 50 times a day. I mean, that's the beauty of the software, is it's telling us where there's resistance. Resistance means where there's some selling going to come in. That's what resistance means. Support of the little blue dots and the blue X's below. So that's kind of the nice part about it. Rick, you don't have to wait for the 3-minute because the 2-minute already was was short actually. If you want to be a little extra safe, perfectly fine to get in there, perfectly fine. That's even lower risk, But to me, it's good enough to get in on a 2-minute triple confirmation. In other words, 2-minute, 1 minute, and a red bar. Perfectly fine to wait for the 3-minute. Nothing wrong with that. This might get in a little later, but you know what? Sometimes that's a good thing. So let's just assume then we get in here, just to make it a little worse, or not worse, but not make it as big of a gain, because I like to keep it really conservative and never ever like to exaggerate the gains. So if we're shorting it here at right around 64. I mean, that just was a beauty. I mean, that took off nice. You know, that was sweet. You know, down and away we went. Now, clearly we have two green bars here. Oh, by the way, the stop always goes on the previous higher red dots. So at this point here, the stop would be there because that's the second or the previous higher red dot. That's weird. It won't go on the dot. But, geez, I mean, we got a big profit on this one now. You got like 10 points profit. That's $500. Now, we never had a chance to I mean, here's a two green bar, but you know, even if we put the stop a little bit above that, I mean, we never even come close to hitting it. It don't even think about getting out on red bars. I mean, that's just giving up money. And finally, we get two greens in a row, which tells us there could be a little bit of a pullback, and then we'd be stopped out right about there. No, but that's a 10-point winner right there. And I'm not counting it from the beginning. I'm counting it from when I'm not counting it from here, where you could have gotten in on the, you know, when you had the triple confirmation on the 2-minute. I'm being extra conservative here on the 3-minute. I mean, that's 10 points. So that's a good one there. That's $500. Nice. Okay, well, when do I get back in? Well, when the tick chart tells us to get back in. When we have triple confirmation on the 1-minute, 2-minute, 3-minute. And by the way, this is a 1-minute chart. 1 minute, not a 2-minute. It's a 1-minute. Let's take a look here at around 10:30 Eastern. Yes, sir. We're right back in right there. Because that's tick chart agrees on the Russell. And it's the same thing if we're looking at NASDAQ or crude oil or, you know, any other markets you like to trade. Now, if you're trading overnight, or if you're trading other markets like stocks, like options on indices, anything like that, use a 3-9 because these E-minis move really fast. That's why we use a 1-minute. Same thing, we use the 1, 2, 3 for crude oil and for gold and for other markets. And then this one, we're going to kind of ride this out, and we're out over here. It's about a break-even trade. Maybe we lost, let's call it a 0.5 point loss. Okay, they're going to get long again right in here. But if you wanted to be a little extra safer, and again, nothing wrong with waiting for the big dot for the 3-minute, the big X. And that's a small loss, you know, let's say about a point. Obvious no trade zone in here. Nothing. That's perfect triple confirmation right there. 1-minute, 2-minute, 3-minute. I mean, everything is lined up very nicely there. Put your stop just a, you know, tick or two below that light blue, that dark blue dot. It's underneath the X. It's hard to see, but it's there. That's support. Holds up the price, and then, you know, up and away we kind of go. It wasn't nothing special here because it came back down. It's about a break even. Small winner, let's say break even. Okay, now we're going to go short right there. This one worked out pretty nice. Again, putting our stops just a little bit above the red dots. Now you can say, well, I've got two greens here. Yeah, I know, but let's put the stop, you know, in other words, if we can use the dots as protection, meaning we can put the stop just a little bit above that red dot, even if we have to stretch it a little further, do it. You'll see a big difference because it'll hit these dots like it did there and bounce right off of it. So this one worked out nice. So we went short here at 56. Here's two greens. Nope, never got taken out. We keep moving the stops lower. The stop is there now when we're in this area. There's two greens. Put the stop, go like 3 ticks above on the Russell. Out right there. Out at 53. Short at 56. Hey, that's $150 or 3 points. So, you know, having a really, really terrific day here. Now we get into the dead zone. And the dead zone's been dead in the last few weeks. So, I mean, good trade may come, but I'm not going to get in on the dead zone. Now, this is a valid short trade right there because that's right at 2 o'clock Eastern. So that's a valid trade, and we lost a 0.5 point out right there. that's a valid trade. And we're going to go long. About another half-point loss. And then we had a nice trade toward the end of the day. We're going to go long there, obviously, triple confirmation. And we're pretty much out at the close. Right here, actually, we're stopped out. So that was okay. We picked up about 1.5 points, which is $75. It worked out okay. So it's a good day. I just want to, this is what you should be looking for on your charts, regardless of what you trade, because it's the same rules. It's the same colors and dots. Stops are small x or large x. Neither vary. Stop is the previous lower small blue dot. Previous slower lower small blue dot when you're long. And when you're short, like I've been saying, previous higher red dot. Price is here. Here's the red dot above. There's where the stop goes. Previous high, second higher red dot for a short, second lower blue dot for a long. So the X's are just for confirmation. It was a really, really good day today. And mini NASDAQ was good too today. I mean, you have to trade the emotion. You have to trade the charts. You have to trade the signals exactly like I said. You got to be a robot. Don't trade your emotions or other indicators. No chance of winning. I could save you the money right now. Go do something else with the money. Trade your emotions. There is no chance you or I or anybody can win. NQ was very good today too. So, and it's, again, it doesn't, you can see yourself on the charts. Just use the same method, same rules, just like I went over. So 1, 2, 3. I like the 1, 2, 3, especially the first and last hour, regardless of what the VIX is. When the VIX is low, under 14, the 3-9 chart is suggested, and but certainly the first half hour, and I think the first hour, but you got to judge it. If you see it's real choppy, ugly, I would never use it. I would always use the 1, 2, 3, the first half hour, because the market is just exploding in volume. But if it's just going to be one of those same kind of sideways choppy type days, jump right over to the 3-9 and use that for the rest of the day till about the last half hour. You judge that, then jump back to the 1, 2, 3. And the VIX was low again today. So if you used a 3-9, perfectly fine to use a 3-9 today. I'll take a quick look, but as you can tell, well, maybe you can't, but my voice is giving out on me again. Here's a 3-9 for the NQ. Russell was even better, but here's a 3-9 NQ, perfectly fine. You're short there, you're stopped out there with the 2 green exit. First trade of the day, you picked up 25 points. Really, really great trade. First trade of the day, $500. Nobody's not gonna like that. That's for sure. Triple confirmation right here. There's your 2 greens. Stop out right there. 25-point winner on the NQ 3-9. Short there. 2 green here because you got about 10 points in profit. That works. Short there. Small loser. And long here. And the 4 o'clock New York close is right about in there. So that one worked out too. So yeah, great day for the 3-9 NQ. Big winner. So whatever you think, this is what we suggest. And I hope I was helpful. So thanks everyone for being here and have a good night.